go to work with the banks. Stay tuned, we'll talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading. A little overcast in Perth today. We tend to refer to this as a sharky kind of day because oftentimes this is the kind of weather that we sometimes have issues with sharks here in Perth. Anyways, today I want to talk about going to work with the banks. One of the biggest things that I can convey to you is understanding the importance of the time of day. Now, you know, I spent years focusing on technical analysis and trying to figure out the holy grail, the entry and exit strategy that was going to save me and you know, time all the winning trades. But I'm going to really emphasize to step back, regardless of the time frame, if you're trading during the day, to really understand what happens in Forex. Now, the biggest players in Forex market are banks, you know, hedge funds. There's probably other large private industry players, central bank, governments, and that. But what happens is, if you think of it in simple terms, okay, sun comes up, down under, Asia, Australia, Southern Hemisphere, these major desks go to work. So the bank opens up, these traders, they're normal human beings, they go into their offices, they execute orders for clients, large order flow, global commerce, that goes into the market. Boom, market moves in Asia. That tends to be in the US evening. So as we get later in the day in Perth, so 2 o'clock roughly, the Asian markets start to close, and then the Europe markets start to open. Now, if you're trading, like I like to use the hourly charts, you know, obviously there's support and resistance and everything else, but you're looking for evidence of institutional volume coming into the markets. The London markets come to work. The markets are going to move. So have they accumulated a position in a certain direction, or have they been unloading positions into the market? So this is where your expertise needs to come in, but you really need to understand that the markets are going to move when the banks open up for business. So these traders come in, they move the markets, and again, these might be zero risk trades. So these are trades potentially where these bank traders aren't necessarily looking to buy and sell to scalp or anything else, but they're executing client order flow, so it's a zero risk trade for them. They're going to capture the profits on the spread for themselves and the bank. The client's going to be happy because they're executing a currency exchange for the sake of doing business. So London market heats up, the volume comes in, the market moves. It tends to have normally, you know, between 2 a.m. and 5 a.m. New York, possibly reached a buying or selling extreme for that session. And then we head into the beginnings of the US market. So New York opens up, London traders may be closing off or profit taking or sitting on their hands. New York opens up, and again, we may have some economic data that's going to cause traders to either exit positions or be completely flat heading into that, depending on the impact of that data. But then again, we're going to see that market potentially move or consolidate, and then as London closes around 12 o'clock New York time, 12 p.m., we're going to see that market potentially either consolidate if it's already made a move, or even reverse or continue to trend. So these are the time frames though where you want to look for evidence. Like for me, using an hourly chart, I look for specific types of setups where there's evidence of institutions entering or leaving the market, and where there's an opportunity for me to have an asymmetrical risk-reward position in the market. So I'm not looking to get the holy grail, but I am looking to enter into a position across a basket of currencies where I can have an asymmetrical target. So I want to be able to limit my downside and have a 3 or 4 to 1 upside on these trades. So really think about how you're trading the markets. Don't get caught up into looking for, you know, EMA crossovers and all these other things, because the markets will move all over the place, but you really want to have evidence when the banks are open and closing as volume entering and moving that market, and be able to position yourself hopefully in the line of drive of that momentum to capitalize on that. So hopefully you got some value out of today's video, traders. Go back, study your charts, really pay attention to the time of day. That is the most critical aspect during the day. You know, again, Asia closed, Europe open, London open, New York Open, London close, the 4 p.m. fix. Go and study these on your charts. Hopefully this helps, and stay disciplined, stay focused, manage the downside, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.